Today was the worst one-day drop in the stock market since 2020 during kind of the COVID crash. On today's episode, what I want to do is kind of cover the contrarian or go against the overall sentiments in the stock market and take a closer look at four stocks that I believe are no-brainers in my portfolio. And I know, right now it's all about the bears, and the bears are finally awake after kind of being scared or shunned for the past few months and the past few years. So obviously, if you're a smart investor, you probably are ones that expect stock markets to be volatile. Expect that maybe this isn't the bottom, but also expect that the future will be a lot better. And the stock prices that we're at right now are kind of unattractive compared to where they will be a few months, a few years, or whatever in the long term mentality. So if you are an investor that believes in the long term thesis, let's take a closer look at four stocks that I'm super excited about. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right. So, like I mentioned, today I want to look at overall four stocks that are a no brainer in my portfolio. But first, I kind of want to look at how the overall market did. We can see the S&P 500 was down nearly 5%. That is pretty wild. But if we take a look at it's also good to kind of look back in the past year. The S&P 500 is actually still up. Unfortunately, from its peak that happened a few months ago, the S&P 500 is down roughly 12%. But these are levels that we saw sometime in early July of 2024. If we look at the overall Qs, the Qs were down roughly 5%. And in the past year, the Qs are still up about 2%. Obviously, most of us probably don't invest too much in the overall indexes and invest in individual stocks. And obviously, some of these stocks have taken quite a hit, a lot bigger than the overall kind of indexes. But regardless, one thing that I want to showcase is if you look at the past 5 years. You can see these cycles go on and on. We kind of saw the cycle in 2022 when we started to see a lot of kind of maybe consumer demand slowing down a little bit, when we were having fears of interest rates continuing to go higher and higher and higher. And look, I mean, even if you bought at the peak on 2021, if late of 2021, you're still up right now. If we kind of look in the max, obviously things can look bad or worse, but we can see here during the kind of COVID scare that we had in early 2022, even if you bought the peak in February or just right before kind of we heard about those COVID cases, you are still up dramatically from it. And obviously the charts look smaller and smaller over time, but through many years, you see these cycles go back and forth. And I'm not going to lie, right? Kind of the downturn cycles suck, right? It could last a few months, it could last a few quarters. And a few quarters might seem pretty short, but if you're looking at your portfolio on a daily basis, it could get pretty aggravating and kind of sucky, right? To see the portfolio down. But overall, the main thing I'm trying to say, the main point before I share my overall stocks is time is on your side. And this is why it's important not to over leverage. It's important to make sure the bears don't get to you, right? Because the bears are out. They're trying to say it's the end of the world. And that fear has a form of emotional toll on you. And that emotional toll can create some emotional investing. I think emotional investing is the worst. There might be new investors as well that are just joining us, and it probably sucks for you. Let me just say for the new investors, use this as a learning experience. I am very bullish on you if you are new and young, because I believe older you is going to make more money. Older you is going to be learning from these experiences, and older you is going to make investments that when we go through these cycles, it's not going to have an emotional toll on you because maybe you prepared a little bit better than you are today. And again, maybe the money you're making today might seem like a lot, but I am bullish in your future. I am bullish in whatever you're doing. I am bullish that you're going to make more money, and the money you're making right now and putting in the market is nothing compared to what you're going to put 5, 10 years from now. So I mean, I know this isn't a therapy session, but I wish I would have had a community when I first started investing over a decade ago, to kind of help me through some of these downturns. So hopefully that's the case. And that is why I'm overall just overall bullish in the tech space in the long term of things. Again, I'm not a permabull. I don't believe I'm always going to have higher prices, but time is on my side. And the best thing for me is to just continue to buy. So the first stock here we're going to look at is Alphabet. And right now, Alphabet from its overall 52-week high, the stock is down nearly 26%. And there are a few reasons that I am excited about Alphabet, aka Google. First, we can kind of look at just some of the revenue segments. I'm not putting everything, I'm just going to share what I'm bullish on. I'm very bullish on Google's and Alphabet's cloud segment. I think they are going to do really well here. And we can see their cloud segment, which is this blue chart, continue to go up steadily over quarter. I do believe the digitalization era is still strong. The AI era is going to help push more growth in the cloud space. So for me, the cloud market is super strong. The other one is just their overall YouTube ads. I think YouTube is another great platform for them. They have various platforms that allow them to be a monster in the advertisement space. Of course, right? Any form of down cycle or macroeconomics can impact the advertisement market. Again, I'm not a permabull. I believe that there's negative cycles, but I believe that in other cycles, and we've seen kind of those cycles throughout the years, you see a decrease in revenue, but there's always going to be more advertisements, especially as we're going into more applications, into a more digital world, into a smarter technology, into more robotics and autonomous technology. I think we're going to continue to see an increasement in ads, and Google is going to be a main player here. The final thing is I want to take a closer look at kind of their total cash right now, and Alphabet's total cash is insane, about $95 billion coming out in quarter four of 2024. I'm going to guess a lot of these big tech companies, and I'm going to be showing the cash of all of them, is going to be used for a lot of buybacks in a lot of these cheap shares. So my opinion, buybacks are going to be pretty heavy if we continue to see stock prices decline, as a lot of these companies believe that their stocks are going to be very undervalued. So some other cases that I'm excited about Google, obviously their AI market. They are very competitive in the AI solution, even though the market is kind of saying they're not. I see Gemini 2.5 is a super great model. There are a lot of open weight models, a lot of imaging models, and they have a lot of other AI solutions. The other thing that gets me excited is they do design their own AI chip, and it's a good AI chip, right? A lot of companies say they design AI chips, but not everybody can say it's a good chip. Google Cloud is one of the few, I believe one of the only ones right now that can say that they design a great AI chip to kind of maybe reduce their dependency of third parties like Nvidia. So Google, for me, various reasons, long-term bullish, obviously short-term, anything can happen, and be prepared. Now, the second stock, we're actually going to keep it here in the AI space and the advertising space. I am really excited about Meta Platforms. I mean, Meta Platforms right now, unfortunately, from its peak is down roughly 27% as well. But again, we can see the stock is still up in the past year. Now, we're going to look at two segments here for Meta Platforms. Their main revenue driver is obviously the advertisement space. Again, very similar to Google. We've gone through those cycles where things are going, where things go bad. But in the long term, the trend is up and up, right? It's overall up. So as long as one can withstand those cycles, that's great. And I think Meta is going to continue to do that. Now, another thing I want to showcase is just this company, again, very similar to Alphabet, has massive amount of cash. We can see roughly $77 billion in cash at the moment, cash and short-term investments. And again, I'm going to guess that a lot of these companies are going to take advantage of stock price drops and do some kind of stock buybacks. With Meta Platforms, very similar to Nvidia, to Google, I believe this is a company that's going to dominate in the AI space, and they're building their Llama 3.2. In my opinion, Mark Zuckerberg is a great leader and a revolutionary leader, focusing on the augmented reality, on virtual reality, on the metaverse, but having such a strong weight in the AI space, and having multiple billions and billions of users. That alone serves as a great data harvesting to making better and better AI solutions. So to me, Meta and Google, two players in the advertising space that are really focusing in the AI market and are definitely growing in the, like I mentioned, advertisement space. And you might be wondering, Jose, aren't these two companies pretty much the same? So again, two different segments for me. For Google, obviously the advertisement space is great, but I am very, very bullish for them in the cloud business. The cloud business, I think, is going to be massive, massive opportunity for Google, and this is where a lot of good growth is going to come. So that's my main thing, and obviously some of the other bets. For Meta Platforms, advertisement is pretty strong, but I do believe they are a massive player in the AI space. They're overslept, and I do believe they're going to come out with some pretty cool solutions in the technology space with augmented reality and virtual reality. So stock number three should be, to no one's surprise, is going to be Nvidia. Right now sitting at $101, down roughly 7.8%. Again, past year, the stock is still up, right? So it's like, it sucks for new investors. Definitely sucks for new investors. But if you're a new investor, you're going to go through cycles like this. And as we've seen in the past, even historically, it's not always a guarantee, but historically, even buying at a peak of a cycle, if you are patient and you are in a strong company and you are in a great company, it can come out higher and stronger. It's not always the case. And that's why I believe diversification is important in different companies. And that's kind of crucial, right? It's not, you're always playing kind of investing in the companies you believe and understanding the bullish thesis. I personally believe Nvidia is going to be a bigger player than it is right now. And that's crazy to say because it's already a $2.5 trillion company. Now, overall, the data center market is their biggest player, right? Roughly $35 billion in data center revenue, the most recent quarter. Now, there are a lot of reports and rumors that the data center market is going to slow down. I don't think that's going to happen. I don't think anyone's going to lose down. If it does slow down, it's going to be more of like a short term, a few quarters, if anything. But I think the overall tailwind for the data center space is heavy, heavy spending. And there's no one catching up to Nvidia. Nvidia recently did kind of a benchmark where they showcased that their products are the best of the best. The GB200, there's no competition to it in the market, and they're going to continue to have the lead. The other thing is, Nvidia has a lot and a lot and a lot of cash. We can see right now built up about $43 billion in cash and short-term investments for their fiscal quarter of 2024. So for me, this is a company that, again, is going to use a lot of these cash opportunity to buy back shares. And I wouldn't be surprised that maybe not this upcoming quarter, because obviously this upcoming quarter is almost done, but for the upcoming quarter and guidance, we are going to see an increase in buyback programs as these companies have a nice amount of free cash flow and probably are going to say that their stocks are undervalued based on their overall estimates and expectations. So Nvidia, the AI market is still kicking, and I'm super, super bullish. Now, the final one is going to be a semiconductor ETF, and this is stock number four. This is probably one of my favorite ETF, and this is ticker SMH. Right now, we can see the semiconductor market has taken quite a hit, but I believe technology is going to continue to innovate, and that innovation is going to be led by, you guessed it, chips and semiconductors. So right now, down roughly 30% from its 52-week high. Massive, massive correction there. And this one, there might be other ETFs. I do like this a lot. Nvidia is their top holding with 20%. So for every dollar spent, $20 goes to Nvidia. Some might say, Jose, you already picked Nvidia. I don't mind that extra exposure. That's my guess. Maybe some might say, screw Nvidia and maybe just do this one where you still get 20 cents for every dollar on Nvidia. Regardless, you get 80 cents or 80% on other semiconductor players, right? And you kind of have that diversification and kind of basket approach. And a lot of big names, right? You have your TSM, you have your Broadcom, your Qualcomm, your ASML, AMD, your Applied Materials, your Analog, your CLAC, your Micron. So this is probably one of my favorite ETFs. Obviously, there is some fee here. I believe it's 0.35. I personally don't think that's crazy when you're kind of dealing in the semiconductor space. Typically, semiconductor companies are a little bit more volatile, a little bit trickier to handle, but in the long-term thesis, I think every form of technology that we're moving into right now is going to be driven by semiconductors. And This is probably my favorite ETF to go with right now. If not, maybe an ETF that is kind of with the Max 7 or so. But those are the four stocks that for me are no brainers. Again, short term stock prices can continue to drop. And if you are new to my channel, this is something I've always discussed, right? I've never mentioned that I believe stock prices will go up all the time, but I am bullish that in the long term, because of the way I handle my portfolio, because of the protection that I have, not through puts, but through the emotional protection of having cash set aside, not over leveraging, not needing the money anytime soon in my portfolio. I get to ride out this wave. But right now, the bears are out, and just be careful because they like to make it seem like the world is over. And personally, I don't think that's going to happen. So let me know what are your thoughts, and sorry for all the rambling. Take care, have a good day, and see you all next time.